Welcome to The Mortgage Voice with Jeff Barton, your voice in the mortgage industry. Each week on this program, Jeff and his guests share their expertise, personal anecdotes, and the latest industry news to keep you in the loop. Now, to provide you with insight and help you navigate the consistently changing world of real estate lending, here is your host for The Mortgage Voice, Jeff Barton.
Welcome, everybody. I'm Jeff Barton, your voice in the mortgage industry. 888-713-2929 is the telephone number. Pick up the phone and give us a call. We're on each and every week. Thank you for those terrific radio stations at K-Tahoe, KMET, and KCAA who bring us, as well as the Roadrunner, to you each and every week. I appreciate what they do and how they do it. It's not easy. Shout out to Malibu Funding, sponsor of the show. And again, I'm Jeff Barton, and I'm the host and the voice each and every week. My NMLS number is 79620 in case you're listening and want to jot that down to check my credentials as to who the heck I am. Well, I'm on each and every week, so that means I'm basically the radio host trying to bring to you some information and informative opinion about what's going on in the mortgage industry. Interesting things in the mortgage industry is that rates obviously have been going up, and so that limits a lot of people out there who need to get a loan, want to get a loan, as prices for housing keeps going up and up and up. And now we're not talking just about the Inland Empire, all those great people at Riverside, San Bernardino. We have a number of different offices in those locations, all the way up to Hesperia, as well as in Rancho and certainly Los Angeles and Orange counties, as well as Ventura counties, all the way up to Santa Barbara. This is just in Southern California. We certainly have offices in a number of different states, 10 to be exact, around the country. I have my hand on the pulse of what's happening in both the availability of funds and the difficulty with which you have if you're trying to get a house loan, if you're trying to get a loan by a bank and you're trying to use traditional methods, yet you don't qualify for traditional methods. Now, believe it or not, it's not a huge percentage. Let's say that there are, $1 trillion worth of loans done this year. Let's say 90% of it are very conventional W-2 borrowers. But that means that there is, if $1 trillion is, what is $1 trillion? 1,000 million?
1,000 million.
1,000 million. Okay, so let's say that there's 100 million, 200 million, 500 million in terms of money that isn't necessarily easy to get and is non-conventional, non-QM. There are many people out there who do not qualify for your W-2 earners. And as a result of the shrinking refinance market, now let's go into why there's fraud in the world, okay? Why people look to take advantage of situations that don't necessarily warrant them to do so. It's need or greed, right? These are the things that drive people to do what they have to do. I'm a dad of 3, I'm a single dad, and I'm working $30,000 a year, but I need to house my family. Okay, that's a need, and I understand that you're going to do what you have to do in order to fill that need. And then there's greed. There's, okay, we're in a particular situation I can take advantage of and make a killing. I can make an extra $100 or an extra $1,000 or an extra $1 million. Yeah, there's need and greed. And in fraud that takes place, when we dissect what fraud is in the mortgage industry, we dissect it as fraud for housing, that's need, and fraud for profit. Now, of course, that's greed. And they really break down into two different camps. However, in the two different camps, there's all these ancillary kind of people who are remora-fish on the process of trying to defraud whoever's lending you the money. So I just want to talk about Starbucks. They had this issue with these two guys that came in and they looked homeless, according to the manager, and the manager called the police, and it turned out that these guys were just sitting waiting for a job interview, and it happened to be that they were people of color, and the prejudice that came out. Well, Starbucks last week closed 8,000 stores for a day. Think about this for a second. 8,000 Starbucks in the continental U.S., and they wanted to go through sensitivity training and training about, how to deal with certain circumstances, as opposed to Everyone has built-in prejudices based on how they were raised, what they see on TV, the video games they play. Everybody has it. So Starbucks closed 8,000 stores in order to deal with this particular problem. Now, it's not fraud per se in the lending industry, but it goes to show you the length companies will go to prevent problems, either public image problems or problems, real problems with people who are sitting in their stores. Heck, they encourage you to come in the store and sit down, bring your laptop, order a cup of coffee. All right, so in that, we have corporate responsibility versus your personal responsibility. Now, I, as a company owner, have responsibility to all my employees, to the borrowers we represent that come into the company, and to those that we sell loans to on the secondary market. This is corporate responsibility. Now, personal responsibility has to do with the fact that, hey, I don't want to do anything that's going to shine badly on myself or put me out of a job. I.e., if I'm receiving an application on a 1003, which I have some questions about the information that's on there, what do? It's my personal information. Do I just kick it up the chain? I kick the can down the road, meaning that you submit a loan and let somebody else worry about it? No, you got to take personal responsibility. That's what the lender fiduciary is when the loan officer gets a license. So in this broad area of fraud, in company responsibility, like a Starbucks closing 8,000 stores, or is it, something whereby you as the loan officer who are interviewing a client? What am I getting at? So Fannie Mae is a company that buys conventional loans. Ginnie Mae is a company that buys FHA loans. Fannie Mae, Freddie Mac, they buy conventional loans, and they both come out with products that they tell lenders, like a Malibu Funding or like any lender on the corner from Wells Fargo to Joe Smith's Loans, who does 3 loans a month. They all have programs by which Fannie Mae, Freddie Mac, and Ginnie Mae put out into the marketplace that they say, if you adhere to A, B, C, and D, we will buy the loans. So the responsibility of the company is to ensure that the loans that they present to these companies have no fraud in them, i.e., is the company they use for employment right? Is their social security number right? Is the income that you're using to calculate whether they fit that program, is that correct? These are all the things that are necessary from a company to be able to present loans to these 3 quasi-government agencies to buy loans from you. If it's the personal responsibility of the loan officer when they interview the prospective borrower about income, about whether they're W-2 or whether they're asset-based or whether their social security number has an issue, you have no idea how often in a climate that we're in now, whereby you have housing prices going up, mortgage rates going up, there isn't enough housing. Let's face it. We're going to talk to several guests on the show about housing in their particular area and about housing in general and how the need for housing, we're building 1 million units less a year than we actually know, that we need. So what does this create? It creates an artificial gap in need and want. So if you're a family and you need to get a house and you can't get a house unless you fudge some documents that your loan officer on a personal responsibility basis isn't either watching, caring, what happens to the whole system? There's an alert that came out, and I'm going to read it to you just quickly. And it talks about this exact problem. And it came from Bob Christman, who's over at Mortgage News Daily. I'll read it for you verbatim. Plenty of people I know agree with the Forbes article titled, "We Have Learned Nothing from the Mortgage Market Meltdown," for example. I certainly hear grumbling from the industry. I've seen dozens of potential loans where the tax transcripts don't match what the borrower was telling us on his 1003. Sure signs of fraud. You know what happened? The borrower cancels the loan and goes down the street to look for the company that doesn't have responsibility, the loan officer that doesn't have responsibility, and quite frankly, they just don't care. And there are a lot of companies right now that are in trouble. Fannie Mae alert came out with a bunch of companies that were fraudulently doing loans. And in terms of that, listen, being honest and straightforward is easier. Fixing the housing problem is not. And that's really at the root of what we're talking about here. Anyway, I'm Jeff Barton. I'm your voice in the mortgage industry. Thanks for tuning in, and we'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I am Jeff Barton, your voice in the mortgage industry. 888-713-2929. That's a telephone number. If you pick up the phone and give us a call, you can talk to me at any time on that number about mortgages, whether you're going to buy, whether you're going to sell, all the things related to mortgages, which in this market, there's a lot. I mean, if you're talking about shrinking inventories in the real estate world, if you're talking about competition when you're out there trying to buy a house, or you're looking to refinance a house, there's certainly a number of different loan products now that you couldn't qualify 2 years ago that you probably can now. Anyway, I'm very happy to have back on the show once again, great guy and a guest working for Malibu Funding, George Gonzalez. He's out in the Rancho area. George, how are you?
I'm doing excellent out here, Jeff. How's everything going over there on the beach?
You know, oh, come on. I don't work at the beach. I work in the valley. Although I live at the beach. Now, that's true. I got to tell you, that is true. No, things are going great for me, and I appreciate you being on the show. Give us a little update of what's happening out in your area in Rancho, out in the IE.
Well, it's a buying frenzy still out here. I'm getting more and more leads every day from realtors who are, getting buyers from their open houses that they're holding. And so I'm noticing I'm just running through pre-approvals left and right. And, people are trying to get in their house during the summer. Sure
they are. And run through a little bit of what your pre-approval process is so that when people who are listening to the show and they're thinking, hey, man, I need this pre-approval, obviously, and what do I do in order to get it? So give us a rundown of what that is.
Well, Jeff, these days it's not even that hard. It's probably harder to go get a car than it is to get qualified for a mortgage based on, a few years back.
Okay.
However, but now, all we need to do really is be at the same job, same kind of field or line of work for 2 years, and have, decent income to qualify to make sure you can afford any kind of credit debt that you currently have and any future debt with the new mortgage payment. And they just crunch that in. They measure that against your credit score. Your credit has to be decent. Minimum right now, credit score would be, depending if it's a VA or an FHA, we can go as low as 580 on a credit score.
Right.
And then, the conventional pricing is requires a little higher score, such as a 640, 660 to get a fair deal.
Okay, and what is a fair deal out there now? As rates keep rising, although they've calmed down a little bit, what are you seeing on 30-year fixed VA, FHA, and conventional loans?
Well, it's funny you ask, because I just priced out one of my golden clients. They're putting 40% down. They have an 812 FICO score.
Oh, that's great.
The best pricing available to them today was a 4.375 at an eighth cost.
Wow. Oh, at an eighth cost, so you have a little loan discount here.
Yeah, that one's a little loan discount. If they wanted to take a 4.5, they'd get, about a 0.375 credit towards their cost if they wanted to get a little eighth.
Okay, this is interesting because I think a lot of people out there who listen to shows like this, or they're listening to MSNBC or CNBC or some of the financial networks, they hear the jargon and they just have no idea, but they hang in there because they're trying to learn. Explain a little bit about what discount points are.
Okay, let's see. I just explained this today to the borrower.
Right.
Basically, is the discount is when the bank charges you to buy down your rate, or they charge you a little extra than what the rate costs. There's three ways to price out a loan. It's either par pricing, discount you pay to buy down your rate,
right,
or you can take a higher interest rate and the bank will give you credit. And so that's basically it's a trick word,
right.
Discount. Like, oh, I'm getting a discount. No, sir, you're paying the discount.
Why? Exactly. Why do they use words like that? I know. I think it's common in a lot of high finance areas to try to confuse borrowers. I know that I've bought stocks in the past, and any time I go into the car business and want to buy a car, there always seems to be this language that you're like, what the heck are they talking about?
Right, and then the final tag at the end is different than what they had said it was.
Right, exactly right. Although in our business with the LE and the CD having to match, that's been long gone, right?
Oh yeah. You better be within $500 or you're going to waste your time and everybody's time, and it'll start all over.
Okay, so the process is that when you get the documentation that you need, either the credit and whatever the job qualifications are, you can then be able to provide to the borrower either a loan program, and when you do and they say, yeah, then you send out what they call a CE.
Well, what do you mean
Or
a CE?
not a CE, I'm sorry, a loan estimate, LE. I don't know what CE.
An
I was
LE,
thinking
yeah,
about going to school.
Yeah, so basically, all we require when I just tell I send them my online app. They click on the link. They fill out the basic info. They give me the credit authorization through my online app. I authorize me to run their credit. I pull their credit. I request 2 years of taxes and last 3 pay stubs from each applicant. And just with those documents there, after I see their credit and debt and their income, I could let them know exactly what they can qualify for, how much they can qualify for, and what kind of pricing they can get if they locked it in, today.
And do you find that when you do this, borrowers want to lock it now, meaning that they want the rate that's available today, or are they more willing to, I guess, what they call float?
Well, you know what? We're unable to lock any loans until we have a property.
I see.
There's an escrow opened on a property.
I see.
Or an address.
Okay, that's good to know. Yeah. So basically,
so it works with refis. With refis, you can open it up, lock it up right away because they already have an address that they're using. But the purchases are a different story. You really can't lock in a rate until you have, you know what? And then if we wanted to, I've seen other LOs just put an address there.
Right.
And just to get it in and locked, and sometimes it works, but eventually I'm sure the lender will catch on.
Oh, absolutely. I think, if you do a TBD, I think what they call to be determined, it's still impossible to lock a rate. So you have to have
you can get it approved by the underwriter based on credit qualifications and income qualifications, but you can't lock in the rate.
Right, exactly. And because the rates are rising and house prices are rising, oh my gosh, unbelievable year over year. It even almost went up 1% in Riverside, San Bernardino last month alone from the last month.
Right. Well, you know what? It's good news for people who bought 3, 4, 2 years ago.
Right.
Now, the people that haven't bought, who've been waiting, it's bad news for them because the people who bought, they're built, that equity's there. Now they have a bigger down payment, and they can find the house that they really want now in the area they really want, and their payment only go up a couple $100 because they're putting such a big down payment from the money they just made on the sale of their property that they bought 2, 3, 4 years ago.
So that's the strategy then. For anybody who got into a house just because they could get into it, now they've got equity that they can take and buy the house they really want. This is what we used to call the step-up market, right?
That's exactly what's happening right now, the perfect step-up market. And the good news is these rates are fixed. So these people, their payment's locked for 30 years. There's no tricky adjustables like last time where, people were doing the step-up, but they were stepping into some ugly loan. The loan was also doing a step up. You know what I mean? So
right.
Not now.
Yeah, in terms of that, what are you seeing out there, availability of housing? I know it's really tight. Give us your estimate as to how many houses you have to look at before you can find one that you want to buy and then one that you can actually buy based on the competition that you're in.
Well, here's one example for you. I had an listing agent was telling me that she got a counteroffer from a buyer from one of her listings, and they said, instead of countering back and forth, my buyer will put 1,000 over the highest bid that you get.
Wow! Wow! Well, so what kind of deal is that? So you really got to trust that listing agent, right? Oh man! I mean that is really something. But it just goes to show you what competition can do in a marketplace that's really tight.
Oh yeah, it's pretty much 4 to 5 properties, and 4 to 5 offers before one hits.
Well, a quick story. As I was telling the show last week, I had a client, 3 months, 15 escrows, couldn't close on any of them, finally went and rented. They just, because every time they'd get into a property, it was overpriced, wouldn't appraise, the inspection went bad. You know all these things that happen to buyers, especially in a market where they're overpaying for the properties that they're trying to get.
Oh, yeah.
Have you had any problems with appraisals, George?
Yeah. Matter of fact, a few properties I just closed, they were 6, and it's not like it's huge deficit. It's like 6,000, 5,000, 4,000. Where I'm like, really, appraiser? You want to cause us problems? Just give them the $4,000 and then equity or whatever. But Yeah, and then, it just got to go back to the salary. Everybody takes a cut.
Right, everybody, right.
Everybody just pitches in.
I think we're at that type of market that we were back in 07, 08, where appraisers now, rather than then, are really nervous. So they are going to be conservative, especially when you're dealing with AMCs. They rather be conservative than having to answer, to the regulators that come and ask.
Right, but and then the good news is I heard that they're getting rid of that Dodd-Frank
a lot
nonsense.
of it.
And that's going to be a lot of pressure. It has to do with appraisals as well.
Yes, it does. Hey, George, we're up against the clock. I really appreciate you once again educating us, telling us about how your business is going. Thanks very much for coming on the show.
Hey, you're welcome, Jeff. Thank you for having me, man. Anytime.
Thank you very much. And that's George Gonzalez from Malibu Funding out in the IE here in Southern California. And I'm Jeff Barton, your host. And I'll see you in about 2 seconds. Bye.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For questions or comments, send emails to info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back to the show. I'm Jeff Barton, your host. The Mortgage Voice, 888-713-2929. That's our telephone number. And if you pick up the phone right now, you can get to me and give me a call. Although we have never taken a call on this show. So I shout out that phone number each and every week. Why? Because I really want to hear from you. Market changes so much, and there's so much to talk about. And in order to really help not only the show, but to be able to understand what's going on across the country where the show is being not only seen on the internet, if you go to themortgagevoice.com, you can see the show. It's also on YouTube, as well as KCAA, KMET, and, those two stations each and every week that air the show, broadcast radio in the Inland Empire. Yeah, you can see this portion of it, which is being recorded, and then we're broadcasting it as well on a number of different places. I'm Jeff Barton. I'm really here to help you, try to help you decide what you're going to do when you buy and sell real estate. We are in Las Vegas, Nevada, currently, and I'm bringing to the show once again Gail Whiting from Capella Mortgage, who's going to give us a little update of what's happening in the Vegas mortgage market. Gail, how are you?
Hi, I'm good, Jeff. How are you?
I'm great. Thank you very much. I know that for Capella, you were doing a number and are doing a number of different jobs, from underwriting to origination to, figuring out the best way to use the hard money loans that you guys occasionally do. Tell us what's happening out there in terms of availability of funds. Is it easier to get a loan, harder to get a loan? What's happening?
I think a lot more lenders have jumped in the game, which means there's just competition.
Right.
So better for borrowers, and a lot of different programs that make the borrowers eligible. Maybe they can't qualify with tax returns, but, bank statement program, 1 year W-2.
Okay.
That sort of thing. Always proving the ability to be able to repay the loan. So no stated available for your primary residence, but stated available on investment. So, yeah.
Okay, so when you have
more lenders.
Yeah, all these particular lenders that you're talking about in the different programs, is there any fear out there because real estate prices have gone up about 12-13% since last year? Is there any fear of a bubble in the market, especially if now we're having programs that didn't exist 4 or 5 years ago, that there may be a developing issue in Vegas?
There'll always be somebody who has fear. It just might not be right for them.
Right.
But there was fear in 2009. Now they wish they would have purchased.
Well, that's true. Yeah, that is true. I wish I had purchased. As a matter of fact, I had that $21,000 condo I should have bought. Jeez, what was I thinking?
You keep telling me about that one. Yes.
No, it's just one of those things whereby I woulda, coulda, shoulda, but it's always about risk, right?
Yeah, and we're in the business. We should have known better, but, the market was different, so different market. And I think that's what we have right now is just a different market. But, hey, my thought premise has always been real estate is based on jobs. Mm-hmm. And if a person who is wanting to purchase is feeling secure about their job prospects, mm-hmm. then they jump in. So,
how is that out there? the employment sector, from construction to casino jobs, obviously, and other public and private sector? What's happening?
Well, all I know is that I have a half-done rehab house that I'm living in, and all the construction people who were readily available 2016 when I bought it are no longer available because the huge construction companies pay a lot more, and so it's I think there's just a lack of construction workers.
Right.
I know when we crashed, a lot of construction workers went to other parts of the states. We're a little, I believe we're a little short-handed.
I think so too.
In Vegas, and a lot of loans I'm doing are construction workers who are getting a lot of overtime.
Right.
I look at their income because the 2-year tax returns from 2016, that when they did their 2017 tax returns, all their incomes are up.
Right.
They're feeling confident. We got the new stadium going in and the 649-acre medical facility over here.
Where is that? Is that over by UNLV? Where is that?
Charleston in the 15.
Oh, yeah. So it's a lot further north. Okay. So that's been Gail Whiting, who is our loan officer out there in Las Vegas, Nevada, giving us an update as to both property and what's happening in the employment. I guess she just got disconnected with us, but she was talking about one of the medical products, one of the medical companies down on the 215 and the 95, North Vegas, really, which is pretty big employer if you want to go that far, as to say.
I'm sorry.
Yeah, no problem. What happened?
I don't know.
Just something happened. So you were talking about the new medical place down on the 95 and the 15?
Charleston and the I-15.
Oh, I see. Yeah.
But the 95 does cross around there, called the Spaghetti Bowl.
Oh yeah, is that construction now? There's a the one thing about Vegas, it just has not stopped building. Even during the downtime, there was still construction, and the highway system there, which they're trying to put together before another round of explosive growth happens. That northern part of the city where the 15 and the 95 all get messed up. How's that construction going?
Well, that's called the Spaghetti Bowl. It's a little bad right now because of the medical.
Right.
Facilities, state-of-the-art medical schools, new research, founders clubs, just, 600 and some acres worth will stretch with great access to downtown, but not through the freeway, and just, that's all I can say. State-of-the-art, Las Vegas is convention center city.
Oh, yeah.
So...
Oh, yeah. Well, they're making plans.
This is going to be a huge hub for more business for the conventions and stuff like that. So,
well, the downtown area in Las Vegas has really changed a lot in the last 10 years, right? And it's continuing its rehabilitation or renovation or just reconstruction. And I guess this is a large part of it.
Rehabilitation.
Yeah.
Mm-hmm. Yes.
Now, let me ask you a little bit about rates. Are your clients, that when they come in the door, rate sensitive, or are they more or less just trying to get into a property? Doesn't matter what the rate. I mean, they're low in considering, but I know you have a variety of products that you can offer them.
Yeah. Well, hard money is hard money. The rates are in the double digits. Depends on loan to value.
Sure.
Our softer money, what we call soft money. I don't know if anyone's coined that term. We have.
Oh, I've never heard that, but no, that's okay. Soft money, isn't that like what you have to do to, bribe your politicians? Isn't that called soft money? I'm just saying.
Well, because we do a lot of hard money, I think this one we just called soft money because the rates are anywhere from 6 to 8.
Okay.
9%, again, depends on score and LTV, loan to value.
Right.
And it's a few clicks up from prime, which is conventional FHA, but it's for those people who can't qualify for conventional or FHA. What I'm saying is Fannie Mae, Freddie Mac.
Right, Ginnie Mae.
Conventional.
Right.
Yeah. And for one reason or another, just seem to fall out of the prime. Maybe you know it better as, non-prime. The 30-year fix.
Right. Right.
You know,
They used to call it
a few
subprime.
clicks up
Now
for
they're
interest
calling
rate.
it, what are they calling it now? It's not called subprime. It's called, it's not Alt A either, but not prime. Okay, very good. Let's
Yeah,
call
not
it that.
prime. Non-prime.
Right. Non-prime, right.
Yeah, non-prime.
But these are
But full
QM loans?
qualification.
Are these QM loans or these non-QM loans too?
Those would be non-QM.
I see. Okay.
Yeah.
Okay.
So, yeah. But they're 30-year fixed. You have to prove your ability to repay.
Right.
There is some stated, but only stated income for investment properties, not your primary. So, I feel good. Lenders are qualifying people this way. Means we won't have so many unqualified people. I feel good
Right.
about the market that way.
Okay. Hey, Gail, I'm up against the clock. Believe it or not, that was a quick 10 minutes, and thank you very much for coming on the show. Once again, giving us your expert opinion on what's going on in the Vegas mortgage market.
You got it. Thank you, Jeff.
And thank you, too. And I'm Jeff Barton, your voice in the mortgage industry, and I'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For questions or comments, send emails to info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry, 888-713-2929. That's our telephone number. If you pick up the phone and give us a call, we can talk to you about your mortgage, about what you have, about what you want to get. A lot of equity in those houses that were purchased 3-4 years ago. In Southern California, prices on property went up about 6.5% last year. Hey, if you're in other states, they could have gone up by as much as, 12, 13%. The number one city in America where prices have gone up is in Seattle, of all places, went up about 13% last year. Now, there's enough reason for you to want to take a look at the mortgage you have, maybe figure out if you need money, take it out. That's what we call a cash-out refi. We can help you with that, or we certainly have plenty of people that we can refer you to. One of those great guys here on the show again today is Luke Mankey from Malibu Funding. Luke, how are you?
I'm good, Jeff. I'm doing good.
Excellent.
Thanks for having me back on.
Yeah, no, thank you very much for coming on the show. Give us your opinion about where the market is and where it's heading.
Well, gosh, the trend has been up with rates, and values are strong, and equity. And it's funny, today, as you may know, and people are seeing, the rates are really taking a drop and probably going down a solid 8% or better. And
Right.
this may just be a little short-term improvement, but overall, it's pretty strong, and purchase market's good, and inventory is still lacking, so keeps values up. And I think as a whole, lending products there's a lot of good portfolio non-prime bank statement loans coming out, and it's providing a lot more options, I think, for those self-employed clients that maybe were a little bit more restricted prior to. It's a good time right now.
Hey, Luke, are you on a handset or are you on a Bluetooth? What's the connection?
I'm on my cell phone, right up to my ear. No hands-free device.
Oh, I like that, though. Yeah, that's pretty good. So in regards to product that's out there and available in the marketplace, you're seeing that there's obviously more product available today than last year. I can tell you why interest rates dipped is because last week the bond market had a pretty good day or two, and the 2-year treasuries that were sold did very well. So that usually means that you're going to get a dip because people fled to the treasuries. So, that means that the bond market's actually going to do better, and therefore the pricing goes down a little bit. I don't think an eighth is a big deal, but it is if you're looking at a 30-year fixed loan, right?
Yeah, absolutely.
Yeah. So where are you getting most of your business nowadays, in purchase or in refinances?
It's been a pretty steady year of purchase, but
Right.
I have had some people, as you kind of opened up with, looking to do cash-out refinances. Client in Florida, another one talking about it up in Washington as well, near the Seattle area. Some people are, they see all the equity in the property that they have, and they want to either go invest and buy in something else, or,
Right.
especially in these hot markets, it's such a solid investment to buy in and get more real estate, so they're trying to secure that and tap into the equity of their primary. And
that's a bit of a change, right, from when it was in 2007, where it seemed like everybody was taking money out of their house and buying cars and boats and going on vacation.
Yeah.
Yeah,
No, that's so true.
I mean, right now, I mean, if you're looking at long-term real estate investment as a smart play, I happen to agree with you. Regardless of the price, the rental market is hot. Obviously, inventory is really down and demand is huge. So I don't see that changing unless we get, huge building, which I don't see any of it happening on the horizon unless in Southern California, let alone in other markets.
Yeah. No, you're right. I mean, you're seeing what they're doing with zoning up in areas like Seattle, and they're allowing people to, convert their single-family R1s to, multiple units,
Right.
create more housing, more
Right.
affordable housing, and they're doing, I think there's 12 different large-scale, like condo complexes going up all around the valley here in LA, with, everything you need right there in this whole complex that they're building up, and it's just, there's clearly not enough inventory, so how can it not be a wise investment? And we're not making these, exotic, loans, and there were so many, poor practices going on before the recession that, in hindsight, of course, you can kind of see why it happened. But in this case, it seems like all these loan products pretty rock solid. Everyone qualifies. They have the ability to repay. There's no inventory. Values go up. I don't know. It could cool off a little bit, but I don't see some drastic. Yeah.
Right. Are you worried that the market is a bit overinflated, or do you think that we're pretty stable because employment is stable and all things being equal, most of the loans are pretty good?
Yeah, I mean, you'd like to think, and I kind of tend to think it's stable. I wasn't sure a couple of years ago. You're thinking, okay, it's got to drop a little bit, but I don't know. I mean, it seems like we're in a pretty stable market right now. I'm not seeing a whole lot of explanations or reasons that give me pause and make me think like, okay, we're going to fall off a cliff here, or there's even, a reason for anything more than a 5% or so drop, if there's anything at all. I mean, it might cool off a little bit, but we're entering into the summer months. I mean,
right now, I agree with that 100%. The reason is like you say, I mean, we're in the summer months here in Southern California where we're doing the interviewing as well as you do a lot of your business. But in regards to that, do you do business in other states like up in Washington or maybe some, like you mentioned, Florida?
Yeah, all of those. I mean, that's the great thing about the company. We've got so many states that we're licensed to originate in Washington being one of them, and that's where I'm from originally. And
right.
I've got one of my best friends. I've got some family that live in Seattle, and I've had a couple different friends that are up in Seattle, and they've done so well professionally that now they all want to move out and down to a little town called Gig Harbor, which is down a little bit south of Tacoma, and it's kind of another exploding market. I've got another good friend that's been building a couple homes. He's on his third one out there where he's building them, then he sells them, then he buys another lot, builds them. And it's a strong market up there. There's just such great employment opportunities and
great employment
living that.
No, my son lives up there. Yeah, I know it. The employment up there is just terrific. I mean, you've got high tech, you've got manufacturing, you've got obviously things like fishing, which have been the backbone up there for a century.
Mm-hmm.
And I just think that in terms of lifestyle, if you like the rain and you like it green, you're going to love Washington. You're going to love Seattle.
These kids are getting these degrees and getting good jobs.
Right.
My neighbor of 13 years, both his daughters just graduated from SC. Not to bounce back and forth between states, but this is just a perfect example. Like your son,
right?
They're getting out of school, they're getting a job. They need the deductions. Like my neighbor's daughters, both of them are in the medical industry, making six figures. They're second year out of college.
Right.
They needed to buy a house. They just closed down their condos a month ago, and same thing up there. I mean, there's such kids are getting out of school. We got such great, careers and jobs and salaries that they need to go buy real estate.
Now, go over the tax bill a little bit with us. So, if you buy a house under $500,000, you can deduct all of the mortgage interest on the loan.
Yeah, I mean, my understanding is we can go up to $750,000.
Oh, really? Okay, I didn't know that. I thought it was $500,000.
Oh boy, yeah. I'll double check on that.
Call your accountant if anyone's listening. But it's either between $500,000 and $750,000. Absolutely.
That's my favorite response. Is look, I'm not an accountant.
Right.
I'm going to give you what I think it is, but you double check with them. That's but yes. But that's certainly a great benefit if you don't own a home and you're starting to make good money, and that's just a great way to build your wealth, equity, and get those tax deductions of the mortgage interest.
Hey, quickly, before we close up the interview, what's a favorite program of yours that you like to get clients into, or is it there is no favorite program? I mean, some people like pushing VA loans or FHA or a particular type of non-QM product, or Fannie Mae 30-year fix. What do you like to do, or is it just you like solving problems for your borrowers?
I almost kind of lean towards the latter statement of just solving problems. And it's not. I truly. I'm not somebody that's like, look, there's just one option. It's the FHA or it's the conventional or whatever. Like, if you qualify for top shelf, then it's certainly my job, and I'm always going to go for that.
Right.
If you don't, then I like the hunt and the quest to try and find something that I can get you into, and that's what's kind of exciting about. I mean, I've always found a home portfolio, non-prime, equity-based, asset-based, whatever it might be. There's always been something I've been able to find, but even more and more, I mean, heck, we've got 1-month bank statement programs now that are almost, they're close to it, but it's like you've got to have a lot of equity, you got to have some kind of compensating factor. But it's exciting to get more of these make sense lending options out there. So I like all of that. That's why I like brokering like we do, because it gives us this. I've got this tool belt with 50 different tools in it instead of just a hammer.
Hey, Luke, thanks very much for coming on the show, man. I always enjoy it. You're a breath of fresh air, and also one of the most thorough loan officers that that I've known.
Thank you. That's why I work for you.
Thank you very much. That's Luke Mankey from Malibu Funding. I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For questions or comments, send emails to info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. 888-713-2929. That's the telephone number. Pick up the phone. Give us a call. We talk mortgages. No, it is not a boring subject. Why do I say that? Because you want to buy a house? You want to sell a house? You want to step up? You want to step down? You want to try to take money out of the current house you live in and buy something else that you can maybe live off of when you retire? That's why mortgages are so important, because an eighth of a point, a quarter point, anything that affects your rate is going to affect tens and thousands of dollars over a 30-year term of your loan. It's crucial to be able to negotiate the best and possible rate. Not only that, but to get the best program that you can qualify for. One of the issues that we're dealing with here in Southern California, as we are in all the states that Malibu Funding is licensed in, their sister company, Bridgeport Real Estate, deals with housing shortages, and we're dealing with that all over Southern California. One of the agents that works for Bridgeport is kind enough to be on the show today to talk a little bit about that and some other things going on in her life. Candace Tab Porter is on the show. And Candace, how are you?
I am great. How are you?
I'm just fine. Thank you very much. And thanks again for coming on the show. I know it's not the first thing you want to do, because you're a busy person. You're a mom. You're working in the real estate world as well as in the advertising world. It's a busy life, right?
It is a very, very busy life. The two jobs, the two careers are manageable, but when you throw a baby into the mix, then it really mixes things up.
Okay, let's talk about that just briefly. Why do I say that? Because many, many people in our listening audience, and of course, it's predominantly in the Inland Empire, but we do get Facebook hits as well as out in Las Vegas and on themortgagevoice.com, where this show will be seen and heard as well. We get a lot of single and married females who have children who work, who are the predominant breadwinners, if not the sole support of the family. How do you deal with the stress of trying to manage all of that?
I mean, I'm fortunate enough to have a husband who's really helpful, and he's freelance as well, so we try to juggle our schedules according to each other's, we work around each other.
Right.
But it's really hard. Real estate is, you have the advantage of working freelance. So being able to work from home and schedule showings and appointments, according to your schedule if your clients are so nice.
Right.
But yeah, it's just tricky. You've gotta just schedule things properly and keep a really strict schedule, and that's how I get through it.
In the real estate world, and I've been privy to this because I've had 3 or 4 clients in the last 3 or 4 months who have been time killers. Oh my gosh, they'll call you at 10 o'clock at night, 6 o'clock in the morning. When you deal with that in a life where you've got a young child, as many people in the listening audience have to do, they have to go to work at 6 and they get home at 5 and they have to manage the kids at school. What do you do and what do you say, and how do you manage an overzealous buyer, let's say?
I have the quality in me where I try to overgive, and it's very hard for me to say no.
Yep.
So when my daughter was less than 3 months old, I had a really good potential client come to me and want me to take them on listings every single weekend while I was, supposed to be on maternity leave. And I basically just said yes to them. And then it was 2 months in, and we kept on looking for houses. We weren't finding anything. So, I would just send them on open houses by themselves sometimes when I knew that it wasn't going to be what they wanted. Because sometimes you know what the client wants, and then they just go out of range, out of budget. So in those cases, I would make concessions, and, they were good people, too. They understood and worked with me and said, we don't want to take you away from your kid. But, I tried to use my best judgment on the properties that were more real and just focus on those.
I think that having children, being a mom, being a working mom, allows you to be able to actually relate to other women who are in the same position, either as potential buyers or potential sellers. I think this can be a real plus for you or anybody else who's in the real estate business. Do you think so?
100%. And, I didn't really pay attention to it, but now that I'm a mother, I would 100%, and by no bias by any means, but just by my own experience, use a mother as a realtor if I wasn't one myself. Because you have to have a really strong work ethic to be a mom, raise a child, and also continue to work. I mean, obviously, you need financial security, but when you're supposed to be on a maternity leave and you're showing listings when your child is 1 month old, that shows a real commitment to your craft. And I think that I would want somebody working for me who has that work ethic, who goes above and beyond and makes those sacrifices to continue to work and deliver for their clients.
High-end real estate, where you work in Malibu, California, and some other areas on the west side, what we call the west side of Southern California in the Los Angeles area. What do you bring to those type of clients that you might say is something that is a little bit different in how you treat a high-end client versus maybe you treat everybody the same, but everybody knows if you're going to make a $50,000 commission, there's a little bit more on the line than a $5,000 commission. Right. Do you see that there's a need for a specialty high-end service that you provide?
I do find that high-end clients typically are more, and this has just been my experience, but more seasoned in real estate. They've dealt with more transactions, and they tend to know what they want more. The clients that I've dealt with on lower-end transactions need to be guided through every step of the way. It's typically their first purchase.
Right.
So I you would think it's the opposite, but you tend to be a little bit more hands-off with the high-end clients because you kind of take their lead and you just obviously cater to their every need, but you let them be the boss as well.
Okay, that's a great answer, and I think that's absolutely right. Paperwork in the deal, I think, is overwhelming. It's overwhelming for agents, it's overwhelming for buyers, and certainly overwhelming for sellers. Do you find that the paperwork over the years has caused you more headaches, or is it simpler now and less headaches, especially with DocuSign and some of the other things that we're using?
Well, the DocuSign and technology is great. The MLS is great, but the forms are constantly changing, and that's a real headache.
Yep.
And for somebody like me who does juggle with 2 careers, there might be a point in time where I'm more focused on marketing and less focused on real estate. So 2 years lapses, and now I'm back doing a deal, and the paperwork can be very overwhelming. It's like starting from scratch again. But, I've been back in the real estate game for some time now, so I haven't run into that problem recently. Okay,
great. Type of client you like to deal with?
I like to deal with nice people.
Me too.
I like to deal with patient people, And I like to deal with people that have sort of the same vision as me, because I do like to help them not only, purchase a home and negotiate a good deal for them, but I like to help them, envision the sort of lifestyle that they're going to create around this home, and the way that they're going to furnish it, and the things that they plan on doing in this new home. So,
well, that's a good point, Candace. I mean, when you're selling homes, it's different than selling houses. And I think the distinction is you're trying to have them vision or look at how it's going to be when you're in this lifestyle. And that's quite a bit different than just selling a bunch of wood on a piece of ground.
Right. It's a culture.
Right.
They're entering a part of a culture.
Yeah, and I think that that's so important, especially if you're dealing with, a beach-style community, or you're a city setting, or something out in the desert, where Southern California has so much to offer by way of not only where you live and the type of places that you do live, but also the lifestyles. I mean, it's so different from one town to the next here.
Right.
So, okay, we're about ready to wrap up the show, but I do appreciate you coming on. One last thing, if you were to buy your dream house, what are you looking for? And I say that because I think a lot of people in this particular market are looking at properties they can't afford. But for you, what would be your dream house?
Well, being that I just had a new child, my dream house, and being that I am not a homeowner yet, I would love to be in a house with a yard, obviously back in Malibu where I grew up.
Of course.
And safety is always number one, a safe neighborhood. So I'd rather compromise square footage and all the other essentials for location. As long as I'm in a safe place, I'm happy.
Great. That's awesome. Thanks very much, Candace, for coming on the show. This is Candace Tab Porter for Bridgeport Real Estate. Thanks very much for coming on the show.
Thanks so much.
Thank you very much. And I'm Jeff Barton, your voice in the mortgage industry.
You're listening to The Mortgage Voice with Jeff Barton. For more on today's topic, visit www.malibufunding.net.